We'll also discuss some of the price action that's going on. You've got gold here off of its highs, but holding up decently well. You might say, how is gold down today? Well, again, if I told you the tech stock world is down 3.5%, but gold is only down 0.6%, you might feel a little bit differently. Gold is actually doing pretty well in what is, potentially a little bit of a liquidation event. A lot of people selling a lot of stuff. Usually gold does go down too when everybody sells a bunch of stuff. Simply because it is a means of a way to raise cash if that is something that investors are looking to do. Sometimes that can be confusing to traders, but sometimes when you have big geopolitical or big growth scares, initially gold can drop simply because people are grabbing for cash everywhere they can. Stocks, gold, bonds, all can be kind of collabing at the same time on that front. Yields are down here this morning. The 2-year yield, the 10-year yield. Stocks, again, getting a little bit beat up, and I'll talk a little bit about why all of this is happening if you're just tuning in. Yeah, it's a bit of a big question mark, specifically around the Chinese AI model DeepSeek that was kind of dropped. I believe it was dropped on Christmas Day, but it got a little bit of attention over the weekend, or actually on Friday and over the weekend as well, because it seems to, at least what the market is doing right now, it seems to be selling now, asking questions later, which is apparently there's rumors, there's the possibility that this Chinese AI or Chinese large language model has many of the same strengths, if not has better productivity or results than some of the AI large language models like OpenAI, etc. That is a fear event, because what it does is says, well, if the Chinese have something and they're working with a smaller budget, and then these U.S. tech companies, which are throwing massive amounts of money. I think it's Google is spending like $50 billion a year on AI development. So the point is that has investors, traders, selling now, asking questions later about this stuff. That's only one half of it. The other half of it was that the U.S. I guess was trying to deport people into Colombia, and the Colombian government refused to allow them to return to the country. And Trump, in response to that, had a very quick tariff boost against Colombia, which I believe there's a lot of coffee imports that come from Colombia. So I'm actually just curious. I have not looked at it, but is Starbucks reacting to this? Not too much. I was wondering if Starbucks, because of course it requires a lot of coffee, I wonder if there's some impact there. Anyways, NAS 100 down here about 3.6% to start the day. It's a pretty good sell-off. I mean, and this is mild compared to specifically the semiconductor ETF, SMH, which I've made a post in our Telegram channel, which, by the way, if you're not in our Telegram channel, it is free to join. The Telegram channel, I made this little post here this morning about, let's see, we have a stock Telegram channel. So I put this post in our Telegram, feeling so grateful, because what happened on Friday is I actually got trailed out of my SMH long positions, which is a semiconductor ETF. NVIDIA, AMD, Qualcomm, Broadcom, all those companies are in the same ETF, the SMH FANEC semiconductor ETF. Well, I bought that. It went up a lot, and then I trailed out of the trade here, and then I'm very grateful that I did, because it gapped open much, much lower here this morning. Have you guys seen NVIDIA? By the way, if you want to join that Telegram, we'll drop the link in the chat. NVIDIA, right? Down 12% this morning. Big drop for NVIDIA. I mean, that's a huge company. So to lose 12% in a day for such a large US company is pretty serious. I think that right now, I'm going to take the wild or the educated guess. I think the market is a little bit overreacting, but that does not mean that it can't drop more in the meantime. Like, we could very well see a couple days here where the market continues to drop on this concern, on this news surrounding the AI out of China, all the tariff concerns.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
That is in. So I took a new trade on oil. I also referenced something within the Edge Finder that I liked here, which is, again, the economic heat map, which overall continues to suggest a relatively risk-on environment, which is something that I want to prioritize being long commodities like oil, which typically can do well in an environment where that is the case. Okay, so that is in the group just now. NAS still down 3%, getting some good reaction here, or some good rejection off of support. I really like to see that. I'm going to continue to watch this this level here around 20,800. See if we test back on it. I'm not in a rush on this because I still have some long positions. I'm still long Bitcoin, despite this stop getting hit. The issue is I'm trading it through IBIT, so I still have a position open on Bitcoin, so I need to do that. This is how these streams go, when usually I don't have a lot of trades and all of a sudden I have a ton of stuff to do. So I'm going to be very, very busy here updating and kind of managing existing positions that I have. Like I said a moment ago, the economic heat map, generally speaking right now, suggests more blue than red, which is a key indicator that I look at, showcasing basically more risk-on oriented assets or something that I want to be long. So when we get these dips like today, these are actually opportunities, in my opinion, to look for some good opportunities. I could be dead wrong and early to these ideas. Nothing I say is financial advice. I'm not here to tell you what to do with your account, but this is what I look at, right? I look at data and I make educated guesses about where I think markets are going. NASDAQ, Dow, US oil, those are some of the things that I'm currently watching. UK 100 is also interesting. So these are some of the trades currently I'm looking at. TLT is rebounding very nicely. This has been sitting in my portfolio for some time and finally coming back to life. Still in the red on this trade, but with yields falling here this morning, you've got TLT up a little bit. If that keeps going up, what I'm going to do is probably sell a call against my position, collect some premium on that. So I'm watching TLT. Currency land, you've got dollar index continuing to drop. Let's see, look at that, dollar underneath support here. Could actually see a bigger pullback, although my opinion, I'd actually look to add to some long positions that I have in the dollar index if we get a larger drop, but no rush to do so, right? So we could actually see dollar index move lower here for a few days, or even a week or two. Depends what happens with the Fed, though. The Fed could come out real hawkish and spike this dollar. So I still like the upside for the dollar index, but where it's currently trading, we've got a nice break to the downside here. In the short run, sellers may take a chance to take this down back to like 106. I would not be surprised by that. Price action seems short-term bearish, longer-term still nice uptrend that I'm looking to participate in if I can. I'm going to keep watching this NASDAQ again. That's kind of top of mind for me here this morning, is to see if we can get a bit of a retracement here on the NAS, in which case I might actually look to take some long positions. In fact, I don't even hate where it currently is for possible longs. I still think we're headed to new highs. So this is about a 4.4% discount off of those highs. Hit that trend line here and is bouncing. Going to keep watching this because I might, like I said, I'm probably going to get long the NASDAQ. I'm just going to see if I can find the right entry. If I can't, I can't. And that will be fine too.
We had a bit of a crazy market open. Obviously, I'm sure I wasn't watching Nick's segment actually beforehand, but I'm sure he went through the DeepSeek things with tech and all that fun stuff, so I won't go over it again. I'll just move straight on to what I'm doing. So I'm currently still in euro pound positions. This one has been, oh my god, it was such a difficult trade to hold and manage, but luckily almost back to average price. So I'm looking to close out euro pound pretty soon. The fundamentals aren't best, but we've had a relatively healthy pullback, and I would expect this to continue slightly lower. How far? No idea. I know Citibank has currently got a very similar position on that I do, and they're looking for the multi-year lows down at 0.825. So there is potential to hold it down to that level, but to be honest, I think I need to just get out and recalibrate a little bit. Dollar Swiss, also in still in my long position here. That's not looking too good right now. It's a little bit precarious, to say the least. Euro dollar shorts, I'm still in still on my what do you call it, still my euro dollar short tangent, I guess you could call it, or whatever. So yeah, still in this one. Now, you might have noticed a slight theme that I am very heavy long dollar. So I'm also in pound dollar shorts. So I'm going to show you a different trade that I'm in that's a little bit counter to what my normal narrative of long dollar. So I also took a New Zealand US dollar long position this morning. And the reason for that one is essentially, let me just pull it up here. Essentially just copying HSBC. So what this does, this puts me in a relatively solid trade. It might not work out. I've taken quite low risk on this one, but it just diversifies me a little bit. So obviously I'm quite heavy long dollar. So I've also now got a position at short dollar. So if the dollar does continue down to 105, at least my portfolio is not completely in the red. So we've got the HSBC G10 FX trade idea here. They've opened New Zealand dollar buys. They're currently in drawdown with obviously target and stop loss. I'm not going to read all this rationale. I actually uploaded a video on my YouTube channel today covering this trade idea. So essentially just following them, very, very simple. But if we move on to a different report, this one's from MUFG, they're in an opposite position, essentially. So they are currently short on pound dollar. So again, I'm not going to read all this, but their trade idea is we are sticking with our short cable. So for anyone that doesn't know, cable is like the nickname for pound dollar. So they're sticking with their short position trade, even though the pair has rebounded over the past week. So we've got two conflicting bits of information. We've got HSBC that's bearish on the US dollar, short term anyway. We've got MUFG that's remains bullish on the US dollar. So we're playing both sides. So we'll see how this plays out. Hardcore hedge. No, this is about as far. I generally don't hedge, but when I am in this many positions, especially going with the dollar, I'm happy to take one hedging position just to balance out my portfolio a little bit. Can you open NASDAQ? I just opened the live now. Yes, so we saw what essentially was just a pretty strong risk-off move when the markets opened, and that was a reaction off DeepSeek. So if we look at the VIX, here we had a this is actually almost corrected now. But when the markets opened, we had a large spike to the upside on the VIX, showing that volatility was up. We had a large spike down on the S&P, large spike down on NASDAQ, as well. I'm not sure if the Nikkei did. Yeah, the Nikkei did. We saw the yen get quite strong as well. So we did see a large move in the markets. Now this was due to the DeepSeek. So if you don't know what I should probably preface, I'm not a stock guy. I don't pay attention to what's going on in the stock world really. So my understanding on this is very limited. I think you've got Chris coming on after that might be able to give you a bit of a better insight. But essentially, DeepSeek is an AI that's come out of China. It's like ChatGPT or Claude or, all the other ones that we've got these days. But it was built, I think they built the whole thing and launched it for around $6 million. Bearing in mind, ChatGPT is hundreds of millions. So I think at the moment we're seeing investors like, well, why are we putting so much money into AI if it can be built with a fraction of the price that the West is doing it with? That's the way I see it. As again, I'm not really involved in that side of trading, but yeah, we'll see. So those reports from my Discord, we send them out every day. DeepSeek sucks. I've not used DeepSeek. I've got no idea. I just know it definitely took an impact there. I think we're going to see a recovery. This move hasn't been, I mean, it was a big move, but it wasn't a trend changing move. It wasn't anything too drastic. It was, actually, let's see. How big was this? So it was almost 3.5% drop on the S&P, which, again, it is quite large, but it's nothing that is a huge concern in terms of the long-term trend being broken. So I'm quite happy at the moment to say that we are going to see a correction of this move. I think it was just, a very quick, fearful move by investors rather than it being a trend change. However, what we do have that could be another hit to the indices market is FOMC on Wednesday. So I would expect Powell to come out and say that he's happy to continue the rate cut slowdown, essentially. So we know that in the WEF speech, Trump said he wants rate cuts immediately. I don't think Powell is going to submit to Trump that easily. I don't think we're going to see Powell come out and say, oh, Trump wants rate cuts, we're going to start cutting rates more aggressively. I think it's very likely that Powell will come out and say he's not influenced by Trump. He's going to continue on the path that is best for inflation and best for interest rates. And we'll see a hold and then a more neutral to hawkish tone. That's my prediction. I could be completely wrong, but that's what I'm assuming. Obviously, in that case, we will very likely see the S&P and the NAS start to fall. 1,000% tariffs. Yeah, that'd be interesting. Reinforcement learning, supervised, and the AI. Oh, sorry, and it's the future for AI. That's why US investors scrambling. Okay, interesting. Thoughts on gold? Yeah, I don't know. I'm a little bit conflicted on gold. There's not much at the moment. Let me just double check the Edge Finder. But yeah, I don't think there's anything really that drives me towards buying or selling gold. So in this situation, when there's not something super clear to the downside on gold, I will automatically start looking to go long, just because that's the trajectory of gold. Generally, I mean, it is moving to the upside on the long term, so I'm going to trade with that same direction. So there's nothing that is telling me specifically you need to short gold now because of X, Y, and Z. Yeah, I will default to going long. So in this situation, I'm quite happy to look at the previous level of support, previous level of resistance, which if we get the retest, will turn into support, and then buy on this break and retest pattern, possibly taking price up to 2,800. I think is a sensible level in my view. But yeah, in terms of a super detailed macro idea, I just don't have one. There's nothing here for me at the moment. Lee, good to see you. Market Pulse. Sean, Alan Perez. Seeing some familiar faces in here. I'd rather see JP for president than the current Tangerine. Fair enough. Have you changed your mind on New Zealand dollar buy? Yes, I took a New Zealand dollar buy just to diversify a little bit, reduce some risk. Dollar Swiss is recovering. It is. Habib, it's good to see you as well. Yeah, US dollar is having a slight recovery, but do you trust it? Do I trust it? I don't know. You could argue we filled in this, whatever you want to call it. People call it FPGs, imbalances, impulsive moves, whatever you want to call it. I don't care. But I guess we've sort of filled that, which could be a sign that the dollar has sort of finished its downside and might head up. But if we look at it on a lot more of a simple way, which to be honest, in my view is just easier, we have broken this level of structure. We did have a slight retest, if you want to call it that. We also created a lower high. So to be honest, 105.5 doesn't seem like a crazy idea. And then from there, obviously this is the upside I've drawn here is assuming that Powell comes out quite hawkish. But yeah, we'll have to see. I'm not convinced on the dollar either way at this time, which is why I'm in a buy and a sell.
Chris, I gotta take my opportunity here while I can. Not everything is green for me, but one thing that's really positive today for me, I trailed out of SMH, which I use a trailing stop loss. I trailed out of SMH on Friday, and I literally felt like I just ran across the fire coals without burning my feet. Like it was like really, really fortunate. But anyways, I got other stuff that's in the red. I picked up a position on oil longs here this morning. What do you got going on? What's your reaction to all this?
Well, I think it found the market at its most vulnerable. If you take a look at the VIX, I mean, 2024, the big outliers that we had, which you can see today immediately, like the market is retreating, but like the VIX was up 45% at one point. There's your December 18th VIX, and there's your August 5th. This is the type of stuff where it's like you can clearly tell when the market is vulnerable. It's over the weekend, because the futures market were just tanking overnight, and a lot of that was attributed to like the Chinese AI DeepSeek, right? That's where the markets were taking the biggest hit. We were down 2+% in the S&P, almost 3+% on the Nasdaq. Now we're starting to it's like everything's red. Everything's red. I don't even have feeds on the percent change right now, which is weird for TradingView. One thing I did notice was interesting though. Equal weighted S&P not even budged. Equal weighted Nasdaq a fraction. So Q's way down. What I like is I had a lot of trades in for the last like 2-3 weeks that were basically up here for sells and down here for sells, and this little move today is looking a lot better for my profits to be rolling in. So I had a couple trades close out for profit already, and grabbed a nice little winner on the SPX today. I'm putting in some income trades where I'm basically doing like a trap. So I'm going to give this thing lots of flexibility where, look, nobody knows what this market wants to do. Is a little competition from Chinese AI enough to break the U.S. stock market? Probably not. So I think this is a bit of an overreaction. But the fact is, how we got to these recent highs, how the S&P got to those all-time highs, I was a little skeptical that we would sustain that type of like gap higher. Mm-hmm. But part of me was like, are we just going to have like a bubble this year? We're just going to have like a straight up melt up, and everything that Trump says and does is just like everything's great for the market? Maybe. But then today's a little dose of reality where it's like, okay, we do have some technicals. We do have the market that actually cares about some volatility. And you can clearly see how price sensitive things are. And this week, we got a ton of news, man. We've got earnings that are heating up this week with Mag 7 stocks. You got Tesla, Microsoft, Meta, Apple, Visa, MasterCard, Fed on Wednesday with a rate that's not going to change, but what's the Fed going to say? And then Friday's PCE. So all those things will play into volatility this week.
Big thing there too, Chris, about just the tariff stuff, right? If we think about the reaction to the Colombia situation, I think that actually told you a little bit about how it told you two sides of the story. It told you how quick on the button Trump is going to be with it, which I think is the point here that is big, because Trump being quick on the button with slapping tariffs on anybody who gets in his way could potentially make the market. I think that was an initial reaction by the market, like, oh, so that first read on tariffs are going to be slow and steady rather than all of a sudden. Well, it introduced, I think, just a little bit of they're still very much real and potentially inflationary, and that could come at any second, and trying to predict it or getting a rollout plan from the Trump administration might be less clear than we thought. So doesn't necessarily mean that, like you said, this might not be the top of the U.S. stock market per se, but it does reintroduce some risk to uncertainty of when tariffs could come into the picture. The Chinese AI stuff as well, of course, is a risk to valuation. You can see there's some, as you mentioned already, some distributions here across the market are not even in terms of returns today, right? So you have SMH down a whopping, the last time I checked, it was down. Yeah, look at this, almost 8% down here on the day, SMH. Yep. You take a look at XLK, right? So the challenge here today is tech stock valuation is what is under scrutiny right now. Right. You have like, okay, all this money going into US large language model stuff. And is it real? Is it not? I don't know. The Chinese AI stuff. How valid is their software? Is it piggybacking? I've heard speculation that it's piggybacking off of ChatGPT and US stuff. I've also heard that there's been third-party audits that have validated a lot of the stuff that it's doing. So that's where I think the market's just saying, who knows how real that AI model is, and if it is real, it poses a serious question to certain things. And final thought on that individual name that I think could get oversold on this news would be Meta, and the market already figured that out because I think
Right.
Meta was like, who benefits from more competition in AI? Meta does, right? Like it would be better in their picture for U.S. AI, companies and distributors and chips and all that stuff. If there was more competition, prices could go down. That's just straight up better for those who are using AI and leveraging it, which I think Meta currently is like the best stock in the market doing so.
Sure. And look, there's always going to be winners and losers. I listened to a lot of content this weekend, and somebody I followed for a while, Jordy Visser, who used to be at Weiss Capital Management. I was just doing like Jordy Visser Labs. He is big on like AI agents and big in the deep seek, and he was talking about how amazing it is and that he's been using it.
Yeah.
Which I'm like, okay, cool, but I don't know what to make of that outside of the market's got to get out of its own way and it's got to grab the story again, right? Like 2023 was like Mag 7 recovery that led us out of the 2022 bear market. 2023 carried into 2024, which was now we have AI potential. Now we have semiconductors and NVIDIA, and then market cap just got crazy high concentrated. So are we going to rotate away from Mag 7 into small cap AI? I mean, I don't know. And so I'm not really sure where to be throwing tons of money because I don't know what the story of 2025 is yet. I think we just have a volatility story, and I'm trying to make some sense of things. But I just look back at we've had a 2.5-year bull market after a 15+ year bull market. I just don't think it's going to be the easiest melt up. And if we have a melt up, we're going into another bubble. I think you and I talked about that offline.
Mm-hmm.
That's where I'm at this year. Is a lot of defined risk, a lot of playing some income games, and just try to trade it as safely as I can. I don't have anything that I like that's like all in. I think gold's a good play, silver's a good play, Bitcoin with protection's a good play, but you're gonna have a lot of volatility in tech because if who knows, like could everything tech and Mag 7 be disturbed? Like if Mag 7 doesn't perform this year, it's 30+% of the entire market in the S&P. So with that concentration, it is going to drag the market down. There's nowhere to hide. If you have like the entire, 30+% of the largest companies in the world that are struggling or getting repositioned, like it's going to be an ugly transition as people get out of Mag 7 into other stuff. So who knows? It could be ugly.
While you said that, Chris, that made me think of something. If we could switch to my screen for just a second.
Yeah, sure.
Let's do a study. Just as you were kind of saying that, it made me think, okay, let's look at a day. You said, what's the theme for 2025? Well, let's just take a look at today. I like to actually look at what the winners and losers are of the day. You mentioned winners and losers. Well, let's take a look at some sectors. So today we have the consumer staples up. That makes sense, right? A little bit of optimism for a place in the market that has been very depressed here recently. Healthcare is also up yet again. You have regional banks up, with yields kind of falling. Comm services up, real estate is modestly flat, financials flat as well, XLY. So these days can be kind of interesting because it can tell you where the market's kind of feel is. And it seems like the most heavy hit are tech, right? Semiconductors. And here's an interesting one, utilities getting hit off the back of this because again, a less demand for or a changing landscape for the AI trade could also hurt utility companies, which have a lot of their earnings calls, a lot of their hype has been around, well, utilities could service that industry. That's a known, right? If there's a bigger demand for energy and the power companies could do quite well in that. Technology also down 3.6%, industrials down 1.4%. So, your winners today are consumer staples, healthcare. These are kind of exactly what you would expect, but then regional banks, comm services and real estate. So just wanted to point that out because sometimes it can be interesting to look at that divergence. You also have on relative strength, you've got European stocks doing okay, which are more banking centric, more value centric types of companies, whereas US is innovation and growth. You also have Germany kind of flat on the day, Japanese stocks down as well. So just taking a full look, and maybe here's one thing that I'm attracted to, Chris, is look at the Russell. The Russell in all of this is a winner. Through the full year so far, Russell has been a winner through January. to many people's surprise. So maybe to your thought of like, hey, we've had a melt up here event for the last few years. What's the landscape look like? Well, maybe S&P and Qs kind of take a break here this year, and you see some final resolution, so some conviction to the Russell trade if yields do in fact fall and you get inflation kind of falling down. Who knows? But I actually think that the Russell still looks good for 2025 personally.
Yeah, in fact, let me take a look at that. I just put a trade in on Microsoft. That is a 417 expiration. I'm just going to get that added in for a pulver alerts here. Just give me a second. So 417 expiration. So another income opportunity on Microsoft. I want to take a look at IWM right now since we would have had a gap lower on that one. Is it enough? I mean, it really didn't budge. Yeah, I was going to say if it was back down, I thought we were gapping a little bit lower on IWM, but we didn't. I mean, the Dow, same thing. So Dow is right there, like not even budged. S&P, not really budged. Qs and S&P moving the most. Dow and Russell not really moving. So shoot, I was just thinking, I know I have some trades running on IWM. It's a March and May. These are 1-1-1 trades. So it's an income trade. I mean, if it doesn't end up getting back down to like 190 or 190 for March and May, then I just collect the income. I do have shares that I own IWM at 200. My cost basis is already down to like 192, but I have a covered call at 225 that I'm not really doing anything with right now. I might just hang on to it a little bit, but I have to dig a little bit deeper in the portfolio today. Look at some rolls potentially. I know on NVIDIA, because we had a huge gap to the downside today at 124. Let me check on NVIDIA. I have a couple of collar trades running, and I know on 3 accounts in particular, my NVIDIA debit should have been, you go to NVIDIA, my NVIDIA, what's my ownership? It's like I own it at like 130. I just need to find my tracker here. Give me a second. There we go. Okay, so 130.08, but my debit on the 125 put is $4.20. So let me just take a look here really quickly. So there's my 140 by 125. Now, what I want to look at here is what is my 125 put trading for? Right now, it's already up $765, which shows that I got in for 415 to 420. But if I close this, okay, I can close this for a nice fat profit of $11.75. Let's just do the math on that. I can lower my cost basis of NVIDIA and reestablish my collar trade. I think I'm gonna do that right now, because that big jump and that big gap, I think that NVIDIA could still go lower, but this is gonna be like an immediate reaction to it. So if I have 1190 minus the 415 that I paid for it, I'm lowering my cost basis on NVIDIA by $7.75. Well, that puts me down to 123 ownership wise, which is actually right at current price. I can still do another collar trade. So let me see if this is worth rolling either the entire thing, or I just take the profit on the put side, close out the call side for some partial profit as well. This is the stuff I'm gonna have to be doing today.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.